Mr. Rishabh, a resident individual, aged 50 to 54 years, is engaged in the business of manufacturing clothes. Well, whenever you read the word manufacturing, my dear friends, whenever you read the word manufacturing, the immediate thing that comes to our mind is the additional depreciation that these entities are going to enjoy. Additional depreciation they are going to have. Whenever we read in a question, manufacturing, that means one special provision the question is going to ask is additional depreciation. This is 20%, the normal rate. The normal rate of additional depreciation is 20%, where the asset is put to use for less than 180 days. I have asked you to remember October 4th. From October 4th to March 31st. Okay, if the asset is put to use for less than 180 days, only 10% of the additional depreciation can be claimed. The balance 10% can be claimed in the next year. Okay, so this is the provision under section 32 of the law where additional depreciation can be claimed. Now, my dear friends, one more thing to remember in this entire process. Okay, that 115 BAC, where a assessee opts for optional tax regime. Okay, 115 BAC, then he cannot claim additional depreciation. He can claim normal depreciation, but cannot claim additional depreciation. Coming back to the question, okay, Mr. Rishabh, a resident individual, aged 54 years, is engaged in the business of manufacturing. He earned a net profit of 82,45,000 as per the profit and loss account after debiting or crediting following. Depreciation debited 1540. STCG on transfer of shares or of listed equity shares in a company in which STT is paid 10 lakhs. Okay, this is okay. There are a couple of things to understand about this STCG. STCG on which the given in the question. Okay, this is not a business income. So while from my gross profit, from my profit, I need to reduce it. From my profit, I need to reduce it because this is not a business income. And it should be taxable under the head capital gain. It is taxable under section 111A. This is taxable under section 111A. The rate of taxation is 15%. The rate of taxation at the beginning itself, we will look into every line so that we understand. So the rate of taxation is 15%. Received income tax refund 15,550, not a income. The entire amount 15,550 is not to be considered, which includes interest on refund. This interest on refund is taxable. This interest on refund is taxable under IFOS. This interest on refund is taxable under IFOS, my dear friends. Otherwise, this needs to be reduced from this profit. Dividend income 15 lakhs. This also needs to be reduced, okay, from the profit and added up to IFOS. This needs to be added up. So when I look into the screen, okay, we will come back to this particular STCG, reduce it from our business income, but we will tax it under capital gains 111A. Okay, this is over. He received income tax refund, reduced the entire 15,550, but this part alone we will tax it under IFOS. Dividend income from Indian company, reduce it and we will tax it under IFOS. Okay. Additional information. Mr. Rishabh installed a new plant and machinery 65 lakhs on 1/10/21, but put to use on 1/1/22. This is very important to understand. If there are two dates, okay, there is a purchase date, okay, there is a purchase date, there is a put to use date, okay, which needs to be considered. Put to use date should be considered, not purchase date. If they don't give put to use date, then purchase date can be taken as put to use date also, plug and play asset. But where they are specifically giving a put to use date, please consider that. In this case, it is less than 180 days. In this case, it is less than 180 days. Remember, purchase rate may be 110, but our put to use date is less than 180 days. Depreciation, including additional depreciation on the 65 lakhs, is included in the depreciation debited. So they have already considered it. I need not do anything. They have considered both normal depreciation and additional depreciation. In the last slide, we saw 15,40,000. In the last slide, we saw 15,40,000. This slide, we see that there is an additional depreciation and normal depreciation in that 15,40,000, which is allowed. Good to go. Mr. Rishabh took a loan from SBI for 50 lakhs on 15/9/21 at 10.5% to purchase such plant and machinery. Total interest up to 31/3/22 has been paid on 31/3/22, and the same has been debited to P&L. Here there is a problem. I took a loan on 15/9/21, 50 lakhs to purchase this machine. I took a loan on 15/9/21, rupees 50 lakhs at 10.5% to purchase this asset. The asset is put to use only on 1/1/22. Okay, now interest on loan taken for purchase of asset. Interest on loan taken for purchase of asset till the date of put to use, till the date of put to use, capitalized, that is added the asset. After the date of put to use, okay, after put to use, okay, revenue, okay, it will be treated. So interest on loan taken for purchase of asset till the date of put to use, capitalize it. After the date of putting them into use, you can treat it as revenue. Now look at that question. From 15/9/21, please understand, from 15/9/21 to 31/1/21 or 31/12/21, for this 3.5 months, the interest should not be debited to P&L. It should be capitalized. It should be capitalized. My dear friends, let us understand this. Let us understand this more clearly. Date of loan. Okay, the question says the date of loan is 15/9/2021. Date of loan. Date of purchase. Okay, not important. Okay, because when there are two dates, date of purchase, date of put to use, date of putting the asset into use 1/1/22. Okay, therefore interest till the date of putting the asset into use should be capitalized, that is added to cost of asset. Interest after putting asset into use, revenue, it should be taken as revenue. Now loan amount 50 lakhs, rate of interest 10.5%. Loan amount is 50 lakhs. You can see loan amount 50 lakhs, rate of interest 10.5%. Okay, interest from September 15th to December 31st. Interest from September, okay, that is October, November, December, 3.5 months. 3.5 months. September 15 days, October, November, December, 3.5 months. 50 lakhs into 10.5% into 3/12. This amount should be capitalized. Okay, this amount should be capitalized. This should be added to cost of asset. This should be added to cost of asset. All of us, please understand the impact. Okay, the impact is as follows. The impact is as follows. Please understand the impact. Okay, the impact is as follows. Increase the profit by 1,31,250. Disallow this expenditure. This is a capital expenditure because the question says the interest up to 31,322 has been paid and the same has been added, debited to P&L. That is wrong because interest till the date of putting the asset into use, interest till the date of putting the asset into use, that is this amount. Interest till the date of putting the asset into use, that is this amount, should be considered as increase in profits. Increase the profit by 1,31,250. Increase the profit by 1,31,250. Claim depreciation at the rate of 7.5%, at the rate of 7.5% normal and 10% additional. When you increase the cost of the asset, this is added to the cost of the asset. This is added to the cost of the asset. So you can claim normal depreciation 1,31,750 into 7.5% plus additional depreciation 1,31,250 into 10%. Because since the asset is put to use for less than 180 days, you can claim this depreciation. Okay, asset used for less than 180 days. Look at this. Interest till the date of putting the asset into use should be capitalized. That is, from 15th September to 31st December, 3.5 months interest should be capitalized. They have wrongly charged to revenue. What do I mean by capitalize? I mean by capitalize as added to the cost of the asset. Added to the cost of the asset. When the asset value is increased, in the first adjustment, they have said that they have charged the depreciation correctly. So when the asset value increases, the depreciation for that needs to be charged. How to charge depreciation? Is it used for less than 180 days, more than 180 days? Less than 180 days. So depreciation will be Normal rate is 15%. Since it is less than 180 days, 7.5%. Additional depreciation rate is 20%. Since it is less than 180 days, 10%. So 22,969 should be added, should be reduced. So in this adjustment, what I will do? 1,31,250 I will add, and 22,969 or 22,970 I will reduce. I will reduce.
Sir.
Listening.
Sir, I think the amount is wrong. Sir, it is a calculation mistake, sir. That 131,250. Sir, it's amount for 3 months only. The amount should be checked for 3.5 months.
Thank you for correcting. Thank you for correcting, my dear friend. Okay, no problem, it should be 3. Thank you for correcting 3.5. Okay, it should be 151, 153, 125, 153, 125, and 26,797. Thanks for thanks, friend, for correcting me. Okay, so it should be 153, 125, and 26,797. It's 3.5 months. I made a mistake by writing it as a, okay. So it should be 153, 125, and 26,797. Advance tax paid during the year 17,50,000. Rishabh purchased goods of rupees 40 lakhs from his brother. The market value is only 35 lakhs. 40A subsection 2. 40A subsection 2. Payment to relatives. Payment to relatives. 40A subsection 2. Payment. Any payment to relative acceptable. You can buy from your brother, but buy as per market value. Where you are paying in excess of market value, that excess will be disallowed. So I will add the profit by 5 lakhs. I will add the profit by 5 lakhs. He paid 40,000 as life insurance premium. He paid 40,000 as life insurance premium on the married daughter who is not dependent of him. The sum assured is 5 lakhs. 80C can be claimed. Okay. For 80C, 80C is available for assessee, spouse, and children. Assessee, spouse, and children. 80C is available for assessee, spouse, and children. Children, there is no word called dependent children. So even for a married daughter, even for an independent son, 80C can be claimed. Since the policy is taken after 2012, up to 10% you can pay. 10% is 50,000. What is paid is 40,000. You can allow it. You can allow it. 40,000, you can claim it in the entire 40,000 ATC. He paid 45,000 by check towards the health insurance policy of himself, spouse, and children. 25,000 allowed. 80D. If any of them is a senior citizen, different. Otherwise, 80D, 25,000. Rishabh withdrew 1.5 crores in cash from 3 current accounts maintained by him. There are no other withdrawals. He regularly files his return of income. Section 194N says, if you withdraw more than 1 crore, if you withdraw more than 1 crore, on this 50 lakhs, bank without deducted tax at 2%. Section 194N says, this is not an income, not an expenditure. This is not an income, not an expenditure. This is an information because tax would have been deducted at source. Section 194N says, up to 1 crore of it, since he is filing his return regularly. If he is not filing his return, the provision is different. Since he is filing his return regularly, Up to 1 crore, no TDS. More than 1 crore, TDS is 2 lakhs. In this case, he has withdrawn 1.5 crores. 0.50 crores is higher. That is 50 lakhs is higher. On this, 2% tax would have been deducted at source. You are required to compute the total income and tax payable, okay, for the assessment year. In the manner he can make maximum tax savings. If the question is asked so, we need to work out section 115 BAC also. If the question is asked so, we have to work out section 115 BAC also. Before going into the solution, let us understand the question once more and then look into the solution of working. 1 minute. Here starts the question. First, I will compute PGBP. First, I will compute PGBP, my dear friends. 82,45,000. I will not add depreciation. That is correctly only charged. Only extra depreciation needs to be charged. Don't disallow depreciation. Reduce 10 lakhs. Reduce 15,550. Reduce 15 lakhs. Reduce 10 lakhs. Reduce 15,550. Reduce 15 lakhs. No adjustment here. On this loan component, add back 153,125. Add back 153,125. Reduce 26,797. Add back 153,125. Reduce 26,797. Add back 5 lakhs. Add back 5 lakhs. Okay, add back 5 lakhs. So from there, I will get my business income. With this, I will get my business income. Once more, from the profit given, reduce 10 lakhs, STCG on which STT is paid. Reduce 15,550 and reduce the dividend of almost 15 lakhs. Add 153,125, but reduce 26,797, the depreciation for that. Add back 5 lakhs. I will get my business income. I will get my business income. Then next is IFOS. Next is capital gain. STCG on which STT is paid, you will have 15 lakhs. Next is IFOS, dividend income, interest on refund. With that, our total income, our gross total income is over. And then provide 80C 40,000, 80D 25,000. Okay, these two we will provide and find out our total income. I am looking into the answer. Okay, computation 82,45,000. Interest, that is what we worked out. If you remember, 153,125. This is for 3.5 months. Our friend corrected me. I did for 3 months. We add back 153,125. We add back 5 lakhs 40A subsection 2. Okay, related party in excess of fair market value, add back. Reduce 15 lakhs dividend. Okay, dividend 15 lakhs, interest income and STCG 10 lakh, reduce 25, 15, 550. Okay, on that normal, this is what this 26,797, normal is 11,484, additional is 15,310 or so, 26,797. So this point I hit at my gross total income. This point I hit at my gross total income. Okay. Now, the business profit, sorry. This point, I hit my business profit. This point, I hit my business profit. Now only I'm going for capital gains, 10 lakhs. Interest on refund, taxable. Dividend, taxable. My gross total income. As I said, 40,000 life insurance. Allowable as deduction. She is not dependent since child of an individual, whether dependent or not, falls within the meaning of the person. Accordingly, the whole of the amount is allowed because it is less than 10%. Okay. 80D 25,000. So I am getting an income of 87,95,330. I am getting an income of 87,95,330. My dear friends, I'm getting an income of 87,95,330. 87,95,330. Look how I am working the tax. STCG on which STT is paid, that is 15 lakh, that is 10 lakhs, okay, into 15%, that is 10 lakhs into 15%, 1,50,000. Other income taxable at normal rates, that is 87,95,000 minus 10 lakhs taxable at normal rates. Of this, 67,95,330 into 67,95,330 into 10% plus 1,12,500. Shall I tell you again? Okay, of this, on the first 10 lakhs, we all know tax is 1,12,500. On the first 10 lakh, 1,12,500. On the balance, this is normal. On the balance, okay, into 30% plus 1,12,500. On the balance, 21,51, 67 lakhs. 95,330 into 30%. So this is my normal tax. This is my normal tax. Look at my income. It has exceeded 50 lakhs, but not exceeded 1 crore. 10% surcharge needs to be computed. 10% surcharge needs to be computed. I'm taking you to the answer. Okay. 1,50,000, as I told you, 1,50,000, and I told you 21,51,099. This is the amount, 21,51,099, and surcharge needs to be computed or 10. This is the total tax, surcharge 10%, and HEC. Okay, I am getting this as tax. I have 2% on 50 lakhs. I told you 194 yen, that is neither an income nor an expenditure. So 2%, 1 lakh, and advance tax paid. So that balance tax payable is 782,460. Repeating, I have paid an advance tax of 1,750. I have a TDS. The bank would have deducted TDS. So that will be the balance tax payable. That will be the balance tax payable, 782,640. Now, interestingly, the question also says, no, I also want you to understand how to minimize tax. So whenever they say minimize tax, 115 BAC needs to be worked out. What is the difference? From this, add the additional depreciation we would have claimed. Sir, how much is the additional depreciation we would have claimed? 65 lakhs is the value of new machine into 10% because it is put to use for less than 180 days. 65 lakhs into 10%, And here again, we worked out something. Here again, we worked out something. 153, 125 plus 153, 125 into 10%, or 66,53,125 into 10% if I claim. If I add back, then I will get my optional tax regime. Look at this. Look at how our law has said computation under 115 BAC. We saw 88, 60, 328 gross total income, because they are adding back 80C and all. Okay, 88, 60, 328 plus 15,313, 6,50,000. I get 95, 25, 640. I get 95, 25, 640. We cannot claim 80C, we cannot claim 80D. Interestingly, only 80CCD part 2, that employer contribution to pension, can be claimed. So let's forget it. In this question, 95, 25, 640. 95, 25, 640. How to compute the tax? How to compute the tax? 95, understand, 95, 25, 640. 95, 25, 640. STCG on which STT is paid, 10 lakhs into 15%. That is the same, 10 lakhs into 15%. Balance income taxable at 115 BAC, that is this minus 10 lakhs. My dear friends, on first 15 lakhs, 1,87,500. On the balance, that is 85 lakh 25,640 minus 15 lakhs. On the balance into 30%. Look at this, 85 lakh 25,640 minus 15 lakhs into 30% plus 187,500. This is my total as per the normal provision, as per the 115 BAC, which is less than my normal provision. Again, add surcharge, add HEC. So this seems to be better. Let us understand that. Okay. Now the law says computation of tax liability. This 150, this is, okay, this is 21,07,000. Look at this, 22, 95, 192. Here it is. So add 150, I get, add surcharge, add HEC. Here tax payable is 9,47,300. Here tax payable is 9,47,300. So normal system is better because the tax there is lesser. Normal system is better. Since the tax under 115 BAC is higher than the tax contributed under normal, it is beneficial for Rishabh not to go for optional tax regime. And in such case, the tax payable would be okay, that is 7. So the normal regular provision is better for Rishabh than to go for 115 BAC, than to go for 115 BAC. I'm going to question number 2. Can Mr. Raghuram file his return for assessment year 21-22 belatedly in the year 22-23 if he has filed to said return on or before the due date? Also specify the time. The answer is no. For assessment year 21-22, year the last dates ends on 31/3/22. For assessment year 21-22, the last date for filing return is 31/3/22. So from 1/4/22 previous year 22-23 starts. He want to file after 31-3-22. He cannot file. He cannot file. This year it is all the more. This year the dates are going to be 31-12-22. At least last year, okay, 21-12-23, sorry, 31-12-23. But forget it, this question, 31-3-22. So he cannot. Okay, but no, okay, he cannot. So inadvertent, also specify the consequence of non-filing. 234 interest will come. 234 interest will come for him. 234 F fees will come. So, to the extent of 10,000, since it is last year, this year only 5,000, but the question is last year question, 10,000. Any loss he cannot carry forward. Okay, loss cannot be carried forward except house property and unabsorbed depreciation. Other losses he cannot carry forward. These are going to be his consequences. Let us understand. If any person fails to furnish his return in time allowed, he may furnish the below before the end of relevant assessment year. This is what I said, 31-3-22, or before completion of assessment. The last date is 31-3-22. This is what I said. The last date is over. Thereafter, Raghuraman cannot file his return, belated return, since the previous year 22-23 begins. Mr. Raghuram cannot file his return for the year. Okay, he cannot file. Consequences, carry forward of losses he cannot have. Carry forward of losses, he cannot carry forward losses. Of course, house property loss can be carried forward. Otherwise, he cannot carry forward loss. He has to pay 234 interest at the rate of 1%. He has to pay 234 interest. He needs to pay 234 F fees, which will be approximately 10,000. Okay, so he cannot, of course, if the total income doesn't exceed 5 lakh, it is only 1,000, but we understand that he needs to file returns of the total income. So these are all. Compute the amount of TD on the following payment. Payment of royalty 20,000 and fees for technical services Mr. A, who is having a PAN, were made. Section 194J says the threshold limit as 30,000. Says the threshold limit, and that threshold is for every particular service. So this is also not exceeding, no TDS. Section 194J says threshold limit, 194J, the threshold limit is 30,000. Here, and that 30,000 for each service. Royalty is a separate service. Technical service is a separate aspect. Each one has not exceeded, so no TDS. Kira Limited paid 18,000 to one of its directors as sitting fees, 10% TDS. Here, no threshold. Here, no threshold. Same 194J. Okay, 10% is the TDS. My dear friends, you are all writing in May 22 or November 22 examination. In this year, it was 7.5% because COVID year. So they reduced it by 2.5. In your RTP of that year, they would have put 7.5%, but please don't take that. Take it for the current year as the full 10%. 2,35,000 paid to Mr. Sumit, a resident individual, by the state government of Tamil Nadu for compulsory acquisition of land 194 LA. The threshold limit is 2,50,000. The threshold limit is 2,50,000. What is paid is 2,35,000, no TDS. What is paid is 2,35,000, no TDS, because threshold limit is high. Let us understand. Royalty. Tax is not required to be deducted. I told you, on payment of royalty, 30,000 technical fees. Since the limit 30,000 is applicable for royalty and technical service separately. I told you for 194J, it is so. Director sitting fees, 10%, 7.5% for the COVID year. Now it is gone. So please understand, it is only 10% that is staying on the amount of sitting pay. Since the threshold limit is not applicable, no threshold for director sitting fees, no threshold, even though the answer says 7.5. This is last year. For your year, 1,800. This is last year RTP, where the COVID year rates are applicable. Okay, to enable more cash flow, they reduced the rate. Now it is back to its original rate. Okay, compensation on compulsory acquisition of land. I told you 194 LA. Okay, no tax is required to be deducted as the threshold limit is 2,50,000. And the actual payment is only 2,35,000. So again, no TDS in this case. In this case also, no TDS. So in our RTP discussion, the first question is one of the finest question we discussed. We understood how PGBP, how STCG, how dividend and everything is taxed. How to tax STCG taxation, that is 111A taxation, will not change, be it 115 BAC or be it normal provision. And then borrowing cost, how the interest up to the date of putting the asset into use should be capitalized. After that, it should be treated as a revenue. So how the depreciation needs to be computed, etc. My dear friends, thank you very much for the wonderful